Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because schools aren't, so let's get started. In this video, I'm going to be going over 4 stocks that I'm watching for December of 2017. Now, this is the last month of 2017, and 2017 has been a crazy, amazing year in the stock market, guys. Most companies are up crazy numbers, at least double digits. So it's been an awesome year to be in the market. Now, I'll be going over stocks that I have on my personal radar, whether maybe some big movers might be coming up, maybe some type of rebound, or for whatever reason, I'm watching them. So the last month of the year, guys, usually the last month in December is pretty good for the stock market. A lot of people think of the Santa Claus rally, people buying a bunch of stuff for the holidays. So let's get right into it with the first stock that I'm really excited about is Disney. Now, I talk a lot about Disney, especially on Weekly Recap. I watch them every single week. But let's look at their chart real quick. They're just finally above the 100 mark. You can see by the chart, I have the year to date. Now, earlier in the year, or maybe mid-year, they were closer to 115, and then they've been getting hit and hit and hit because of their ESPN numbers. Going over some things that they had going on for them. This is early November, but you could see Disney missed their revenue by a little bit there. Missed by 0.08, so 8 cents. Their revenue missed by $560 million, and on that date specifically, they were down around 2.8%. So, looking at a little bit more numbers with their broadcast networks and studio, they are down by around 3%. Their revenue missed by $500 million. And with ESPN, that's been their problem recently, but they were steady just under $4 billion. Broadcasting fell by 11%. Operating income fell by 15%. And you could see their revenue by segment. Their media networks down 3% like we saw. Their parks and resorts, they were actually up a little bit, 6%. Their studio entertainment down 21%. And consumer products and interactive media down 6%. So why the heck am I interested in Disney? Well, especially for next month, guys. Star Wars is coming out. Huge movie franchise, and they have been talking about starting up a new trilogy in Star Wars. So that will definitely grow and continue their revenue in that segment of their movies. Now, this types of thing, looking at Disney and Star Wars, I think that would definitely start helping them with a rebound. Especially with their streaming that they're starting to get into for 2018 and 2019, more toward the 19 time period. So they're definitely going to be huge competitors of Netflix. Looking a little bit further down toward the end here, you could see that Goldman Sachs kept the company at a conviction buy and raised its price target to 120 from 115. So that is a good sign that they are going to rebound from their low hundreds, going back to their levels that they had toward their early this year, mid this year, of their 115 mark. So Bob Iger, or Iger, I think it's Iger, but the CEO of Disney, he openly said that this year, 2017, was kind of like a reset year for them. But I do think their growth will continue, especially with the streaming and Star Wars especially. I think they would have a decent rebound when all those people are going to just see the movie. So I'm excited to see what happens with that next month. Like I said before, Disney is definitely one of those companies I'm watching very carefully just because it's a huge company. Everyone knows them, and they've been getting hit this year. So if you're interested of wondering if you should invest in Disney, I do have another video going into a little bit more detail. I'll leave a link in the description for you guys to check out. So that's enough about Disney. Let's get into the second stock that I'm watching for December of 2017, which is Amazon. For Amazon, they've been killing it for this year, guys. You could see up over 50%, getting close to 60%, way over the $1,000 mark. And it's been looking great for them. Some earnings for Amazon, you could see that they beat estimates of their revenue by 0.49, but they've been doing very, very well. Their revenue beats by $1.6 billion. This was late October, by the way, but their shares for that day were up 2.63%. For a little bit more numbers, we could see that the company reported 35% sales growth. That was for North America, and also internationally of 29%. Those numbers are amazing, guys. So very, very nice. You can see their operating income fell 40% from last year, actually. But they also did buy Whole Foods, so that's another thing to consider as well. Now, why I'm specifically looking at Amazon for next month is that Black Friday is going on. We got Cyber Monday and also the holidays. So a bunch of people, they don't want to deal with going to retail stuff anymore. They don't want to try to kill each other for buying jeans. They just go online, get the same great deals basically, and buy it off of Amazon. That's why Amazon is just doing phenomenal. And I think the future for them is just going to be great. So Amazon is just awesome to watch, guys. Those numbers don't lie. They're just killing it with their revenues and all that good stuff, especially looking at holidays, how people are just buying online now. Speaking of holidays, going into our third stock that I'm watching for December is Apple. As you can see from the year-to-date chart, they're just around 175. Year-to-date, up over 50%, killing it. But Apple has their iPhone 10s, guys, especially for holiday seasons. That's like the biggest and best phone out there. Yes, high price point of that $1,000, but people go for iPhone product, Apple products with iPhone. So I think that's going to be a huge hit, bunch of sales, going to be crazy. So it's most likely going to have very, very nice growth with these iPhone sales with the holiday season. And what definitely interests me is that their PE ratio, they're actually fairly valued. So I'm going to put some numbers up on the screen for you guys, but looking at their PE ratio, their trailing PE ratio is just under 20, which is, normally they say fair market value is around like 17 to 18. So it's a little bit above fair. However, if you look at the forward PE, what they're going to be looking at, that is in the 14 area. So a company like Apple with a forward PE of 14, I think it would be a pretty decent buy to get in around this area. Little more numbers for you guys with Apple. This was beginning of November. They did beat estimates by 0.20%. You can see the revenue was around $52 billion, beating it by $1.8 billion. And moving over to here, you could see their revenue growth in the Americas was up 14%. Europe, 20%. China, 12%. Japan was actually a hit of -11%. And Asian Pacific of 5%. Look at next, right below that, product sales doing great. Estimate plus 3%, and then they have some iPad plus 11%, Mac 10%. So their growth is still there, very strong, especially not only in the Americas, but internationally. And very soon, I think Apple is going to be the first $1 trillion company. Will it happen before the end of the year? We'll see. That would be pretty awesome. But I think Apple has great growth potential. So definitely keeping an eye on them in December. Moving on to our fourth stock that I'm watching for December, which is GE, General Electric. Oh boy, so they are down over 40% this year, guys. They crashed. That's what happened with GE. Around the $18 mark, they've been getting destroyed. Now, I will say that I'm not focused on GE, maybe not specifically for December. However, I want to keep my eye on them just because they did crash. You know, this could be that buying opportunity because of that huge dip or after a crash, so they could rebound. They do have their new CEO. They are trying to cut out some businesses that aren't as profitable as they want, and they did cut or slash their dividend in half. So if they're on the right path, they can rebound, or they might not be. It could be a falling knife. They could be going a little bit further down, so I don't want to catch a falling knife, of course. But I definitely want to keep my eye on them just to see what's going on. Looking at a couple numbers, you can see that their profit they actually missed it first time in 2.5 years. So nothing in too much detail, just something to keep on my radar just because it's a huge Dow company. And they were the worst performer in the Dow. So maybe something will change for next year. Now for a little bonus, those were the 4 stocks that I'm watching for December 2017. We have Disney, Amazon, Apple, GE, and a little bonus of Bitcoin. Why? That right there that's kind of why. Yeah. Bitcoin has been growing like crazy, some super inhumane growth. But I'm not investing in it. I probably won't be, but it's definitely something that it's interesting to watch and just to see what happens with it. So those are the things on my mind, guys. If you have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say. And don't forget to subscribe to my channel, Real Life Money, where we talk about real life and money, because not many people do. So thank you so much for watching, and I'll see you in the next one.